every platform, every company has APIs. I actually think everything will have chains because chains are better and more scalable and more secure ways of composing on a platform. Sand is a very liquid token. Actually, Sand Chain has, hundreds of millions of dollars of liquidity on a daily basis. Creator community in particular, they now have a platform in which they can monetize their creativity and their assets.
So for the creators, what would this mean?
How long does it take you to get paid out from YouTube for the fees that you make?
Oh, YouTube takes forever.
Yes, in some cases, I think I heard it's 80 to 90 days. We're in the finance world here in crypto. You can create yield, you can create assets from this and all that kind of stuff, and offer some kind of financing package. So if the YouTube payment will come in 30, 60, or 90 days, actually the creator can get paid out the money right away. The advertising industry is a $1.1 trillion market, and 80% of that is digital, basically owned by Google, Facebook, Apple, those guys. The global index of people who have a stock portfolio is less than 10%. And that's basically what the digital literacy rate was like some 20, 30 years ago. Bitcoin isn't going to be the most valuable asset. As a single asset, it will be. But collectively, altcoins is going to be outperforming Bitcoin maybe up to 10 or 20 times. So by 26, we think the space will be a $10 trillion market.
My name is Mia, and you're watching Global Blockchain Show. Today's guest is Yat Siu from Animoca. Yat, welcome. Last time we talked, it was months ago. There's so much that happened since. I think the best thing to start off with is what's happening at Sandbox. Everyone's been talking about it. I feel like you are the right person to talk.
Well, thank you so much. And it's great to be here again. And I mean, maybe it has been months ago, but it certainly feels like years in our industry, doesn't it? Everything moves so quickly. So, I mean, with Sandbox, there was a little bit of dramatization and a little bit of, basically sort of sensationalism. That's okay. We understand how some of the media works these days. Mm-hmm. But actually, we were planning to make an announcement, which is now public, the fact that we announced Sand Chain, right? And actually, a lot of people were saying, oh, Seb has left or he's been pushed out. Not true at all. His actual focus has been on building the Sand Chain, which is now public news, right? So I think, we wanted to make that whole announcement with the sort of new direction, with some of the changes. And of course, when you're moving from something that is not just focused on a game platform and a metaverse platform like Sandbox, but extending into a chain ecosystem really for creators, you do need to have some restructuring. You need to have different skills and people around. And that's basically what happened. But of course, it's something that we couldn't talk about because we were planning to announce it at Token. And that's basically one of the reasons why we had to sort of stay quiet about it. But now, I guess to be on the record, the founders are still involved, just in different roles, specifically focused on that growth. They're expanding in the Asia-Pacific region, really sort of growing the Sand Chain, really for creators. And maybe the high-level way to think about this is that if you think about platforms like Patreon, for instance, right, these are very, very sort of important platforms for creators, but they haven't really taken advantage of what happens in the crypto rails, and basically Sand Chain can help do that. We shouldn't think of Sand Chain as something that will compete with like an Optimism or an Arbitrum. Not at all. It's not in that category. Okay. It's much more something that is really sort of purpose-built for creators. And my general lens is that when you launch a chain, to me, I think we're going to have a lot of chains, not necessarily as L1, L2s, but as app chains or as really utility chains of some form or fashion, because they're probably the best way in which you can add adaptability and development or sort of developer-friendly tools. Every platform, every company has APIs. So in the same way that we think about everything having APIs, I actually think everything will have chains, because chains are better and more scalable and more secure ways of composing on a platform rather than just straight APIs.
This sounds really exciting and new. I wonder what happened that led to this restructure, and why Sand Chain out of all the things you could have come up with.
Well, I mean, I think why? Again, as I mentioned earlier, Sand Chain is something that you can adapt. So meaning that if it's a chain infrastructure, you can get all the developers who are comfortable with smart contracts and development tools to build on top. The other thing that the blockchain has really demonstrated is that when you put out something on chain, you have a set of rules that everyone knows and can identify with. And so it's very easy to compose. One of the problems that you have when you're basically building on purpose-built APIs is they could be deprecated. They could be changed. They could, and then what happens is you don't have any consistency. But when you're basically building on something that's tried and true, then actually it makes it much more predictable. Also, we have a very large developer base now and a growing developer base who are comfortable building on chain. This was not true 4 years ago, right? 4 years ago, it was tough to get smart contract developers, or it was tough to get even an AI agent to understand what that is. It doesn't even exist, right? And now you can do that. So again, the timing is right now. And I think the timing is good also because, again, as I said earlier, I think everything will have utilize sort of chain infrastructure in a way to help adapt and compose and to coordinate. Now, Sand chain in particular works well for the sort of this process because Sand is a very liquid token. So in other words, from a payment structure, from a reward structure, actually Sand chain has, hundreds of millions of dollars liquidity on a daily basis, on a pretty average basis, which means that for the developer community out there, for the creator community in particular, they now have a platform in which they can monetize their creativity and their assets, and then others can buy that through the Sand chain. So you can see a complete sort of commerce base that's already developing from that. So again, I think Sand chain has many, many sort of potential areas. Pretty excited about it.
So for the creators, what would this mean? Like for everyone watching that would want to explore this?
Well, all sorts of things. I mean, on the very basis, people can think about sort of getting paid, of course. Now, one could say, oh, yeah, well, already people get paid. But did you know, for instance, that, I mean, you're a YouTube creator, for instance, and you make content. How long does it take you to get paid out from YouTube for the fees that you make?
Oh, YouTube takes forever.
Yes, it takes forever. In some cases, I think I heard it's like 80 to 90 days. In some cases, depending what kind of creator you are.
Even TikTok and Instagram,
Yeah.
it takes forever.
They take forever. But now guess what? We're in the finance world here in crypto. What's that float worth? 30 days, 60 days? It's more than just a term deposit. You can create yield, you can create assets from this and all kind of stuff. So basically, when you put something on chain with these dynamics, for instance, you can offer some kind of financing package. So for instance, I would be able to basically get money in advance because the payment will come from YouTube. So if the YouTube payment will come in 30, 60, or 90 days, actually the creator can get paid out the money right away. Or if he doesn't get paid the money right away, then he can actually maybe generate yield from the assets as well, right?
Yeah.
There's a fee involved. Because the problem is that most creators don't have strong financial planning. That's just not their forte, right? So they need the cash now. And how many people, imagine getting a paycheck 90 days later or something. That's kind of difficult. And somehow we've normalized that, which isn't okay. But again, on Sandchain, you could do that sort of rapidly. And the other thing is, of course, you have developers building other applications on top. I mean, we've seen what happens when you build a chain infrastructure, that new developers come and build new financial constructs that we haven't even imagined. So with, for instance, what we did with EDU, right, with Open Campus, with our education chain, one sort of example that was built out, which we didn't expect, was student loans on chain. And people basically built a new construct, basically providing financing, giving it to students who needed it, but of course, finding ways in which you could better construct financing terms, basically through a blockchain-based system. And again, this is the kind of innovation that you can build that wouldn't have normally been possible if this was done on an API basis or was done on some kind of custom basis. But on-chain, people can contribute other assets. So it's not just limited to dollars. You can contribute Bitcoin, you can contribute Sand tokens, right? So you, again, expand an entire universe of liquidity that's out there. Because as big as Bitcoin and the cash is, actually the altcoin space itself in terms of volume and liquidity is, over $1.4 trillion as a market today. That's an audience that one has to address as well. So I feel like, we haven't yet seen all the possibilities, but when you make it as a chain, then essentially you allow people to build on top of it. So that's, all sorts of applications. I think we're expecting hundreds and hundreds of developers to come and build on top because there's liquidity.
Yeah. You touched there the fact that creators could get paid faster. We've seen recently Forecaster added payouts to their platform. Zora is also trying to, not trying, they actually have like a way to now monetize your social media. I actually think these two are very strong players on the social side.
Mm-hmm.
Do you pay attention much to the social
Absolutely.
applications?
Yeah, I mean, social applications are actually one of the main drivers. I would argue that blockchain is a social system to begin with. Right.
Yeah.
So when you think about it, it may seem primitive in the sense that you don't have the fancy interface, you don't have the sort of UI, UX, but just building on chain, you're already building a relationship. The fact that I know what assets you have, the fact that I'm connected because you own a token, I don't own a token. I mean, think about the tribalism that has been created by OG tokens like Bitcoin or Ethereum or Solana, for instance. These token ecosystems have a kind of social connection that don't come from an application. It's not that people are bound through Ethereum because of MetaMask. MetaMask is a tool that spreads it. But the fact that you own Ethereum, I own Ethereum, kind of creates a kind of kinship. Or if I own Bitcoin, you own Bitcoin, or other people own Bitcoin, we're kind of part of a club almost, right? So that's basically the social construct. So to me, blockchain is a very natural way of doing it. The other thing that you need when you build a really good social system is you need rules that are dependable, right? So in society, we have that in the form of When we see a person for the first time, we generally say hello, right? And mostly we smile, right? And we shake their hands, or in other places we bow, depending on the tradition. These are rules, social norms that we've established over time as a way for us to have cordial communication, and they don't change. And it's interesting, right? We agreed on those rules, we built a consensus, and now we can order society around that. For instance, we're not going to steal from people most of the time, depending. If you're a bad person, you get sent to jail. That's why we have those systems. Blockchain is all of that. When you have a set of rules in blockchain, you have the predictability. If I give you a token, I know it's yours. If I do a certain transaction, it's certified. Like all these things create rules-based systems in which we can have the certainty of which we can then deepen the relationship through the layer of the transaction. So that's basically, when you think about social networks, like what Farcaster, for instance, or Lens, or those guys have been trying to do, and their various forms of experimentation, they've been trying to basically extend that into sort of a better UX, but in an infrastructure that is already laying the outline of that social framework. Like the internet made it possible to connect. Now you need an interface to make the connection deeper and better. And, bringing the topic back to gaming, right? I think I may have mentioned this at an earlier show with you, but Bartle's taxonomy is a good place to start, which is basically the way that we sort of psychographically sort of map gamers, right? And we have basically typically 4 categories in very simple terms, right? We've got the killer, the achiever, the adventurer, and the socializer. And in very rough terms, social is 80% of the gamers. So when you go into Roblox and you ask most of the kids, why do you play Roblox? They'll typically tell you, because my friends are, right? And it's the adventurers and the achievers that are typically bringing people into the game. It's bringing their social network and then establishing that, right? No different than when you're a YouTube creator, you have a small percentage of people that make content, and then they bring the rest of the audience in, and then they participate through comments and becoming social, right? So it's the same kind of hook that we see here. It doesn't matter whether it's gaming, whether it's sort of, a social network, whether it's finance, it's all social. Ultimately, as humans, we're ultimately social. That's our engine.
Yeah, when I learned about network effects years ago, I like doing growth hacking. One of the things that one of the tools you can use is actually blockchain. So you can layer different things with each other. One of them would be using blockchain. So it is incredibly powerful.
I want to just touch on the network effects part, because network effects is an asset class. And I think a lot of people don't appreciate that the network effect in itself is an asset, in the same way that intellectual property is an asset. It may seem virtual, but the connection has value. For instance, the fact that I know you and we're having this conversation, there is value. What that value is, we may not know exactly. We can't enumerate it, but there's value. There's value between our friendships. There's value between our business relationships. There's values between being in a community. The reason why we choose to immigrate from one country to another, why are we all choosing to, well, many of us choosing to move maybe to Dubai or to Hong Kong? Because there is a network there that isn't necessarily something that you can enumerate in value, but it's worth joining. And that's basically what blockchain and most of the tokens are out there as well. They give network properties, and you can then measure the value of those network properties. And this network asset that is measured by the network effects is how we think about how you can value a token economy. So if you want to see what a token economy is worth, if you have a way in which you can measure and analyze the network effects and the strength of those network effects, then you have a way and a proxy of determining what it's worth. And I think that's a new kind of valuation methodology that most people haven't really thought about, because they're still thinking in classic PE terms, in sort of profit multiples, and that's a measure. But in this sort of networked economy, in this digital age, it's much more than that.
I think people are starting to realize the value of networks, personal networks, online networks, and that touches into like creator economy as well, having an audience, the power of an audience. Actually, I learned recently, because I'm working on a project that touches on the creator economy, and it's actually growing faster than AI itself. Everyone's talking about AI, but AI is growing at 29%, if I'm not wrong, past 5 years. And creator economy, influencer marketing actually, more specifically, is growing at 33%, which is very impressive. And we're seeing now more and more demand for this attention. People are realizing that they need attention for everything that is built.
Yes.
And if AI permits anyone to build something, then there will be even more demand for this attention. Have you thought about this? from the angle of the companies on your portfolio, like how they can like leverage this attention?
I mean, everything is attention in crypto, but I would say the whole world is attention based today, right? And attention was always a superpower. The only thing is that we never understood it because attention was formerly centralized, right? When you think about it. So the newspaper was attention. Certainly my generation, since I'm a little older than you, we used to, in the morning, read newspapers, right? And then the newspaper was the medium of information. And many, let's call it people from that generation, thought of it as news, as information, but actually it was attention. If you were in the news, you had attention. And when you have attention, you have power, right? And it doesn't matter in all age of history, whether you call it propaganda, whether you call it sort of, sort of journalism, whether you call it whatever it is over time, the ones who were able to basically harness the attention tended to be the most powerful, whether it's in politics, business, or whatever sort of area that they're in. So now what we had with the internet is the democratization of that attention, right? Information was flowing more freely. And so suddenly someone who was an influencer that nobody knew and, Mr. Beast wouldn't have been possible 30 years ago, but now it's possible. And you have many other versions of that, which of course puts under threat the centralized sort of classical forms of media, which is the newspapers and the TVs or the radio stations of old, right? And now everyone basically has a way in which it can generate attention and has a way of doing so. So that's key. And going back to tokens, tokens are a way in which you can measure and own a piece of that attention. The attention economy to me is basically mostly measured in the form of advertising. Of course, you've got other deals like promotions and so on, but generally the advertising industry is a $1.1 trillion market. And 80% of that is digital, basically owned by Google, Facebook, Apple, those guys. And so why would we be surprised that these are the biggest companies in the world? Again, it comes down to basically having all the attention. And even when you think about something like, the dollar, it seems like, oh, it's a medium of exchange, or maybe for some a store of value, although of course it hasn't been for a long time. The dollar, the fact that it has this attention, now in the form of stable coins where it's distributed as widely and as broadly as possible, has now this incredible kind of power, allowing America to keep printing money, essentially taxing the rest of the world for having the attention of the dollar, because somehow we want the dollar. But logically, when you think about it, why do these places want the dollar? Maybe it's stability, maybe it's implied, because they want to be connected to what they think is the world's largest economy and the prospects of joining that network economy. So it's worth having a dollar, even if America is constantly diluting the base and taxing the world for it, right? So the network effects really are the most powerful thing. And some politicians get it better than others, both in positive and negative forms of attention. I think Trump is a master at this. I don't know that he necessarily thinks in those terms. I don't know him. But I would say that he's always keen to bring attention to whatever it is that he's trying to do. The shock value as well, right? It's a kind of shock therapy that goes in because, we react towards that and then we go, oh my goodness, this is shocking. This is crazy. And so he gets all the attention. And by getting all the attention, America is the most powerful country in the world. However, the kind of attention that America has gotten in all sorts of areas is probably second to none, even more so than ever before, precisely because he knows how to harness this. And creators need to know that more than ever. I think there was a time where, like, my mom is an artist, and so she had agents that were representing her, but she didn't really know how to promote. She was, a person in her craft. And then, she would be paid by the agent. The agent is the one who actually is the one who's doing the promotion. So who owns the network? The agent owns the network, right? And by owning the network, they own the money. And so at the end, my mom worked for the agent rather than the agent working for my mom.
Oh,
Right?
absolutely.
Yeah. And this is something that a lot of creators don't understand, partially because they don't understand money. That's an important part. But partially also because they don't understand that they need to own their customers, right? Spotify is probably the biggest musical agent in the world by far. And again, there is no musician that makes money on Spotify
I was going
because,
to go there. Yeah.
they don't make any money because Spotify dictates the terms. Because they own the attention, therefore they can dictate the terms. It's not the other way around. It's not, hey, I'm the creator, I make this wonderful talent. There are some cases, but in most cases, you need discovery. And those were the roles of the distributors and agents, and they took a fee. They just ended up taking too big a fee. And basically, with the internet and blockchain, you can basically democratize that.
Yeah, with Spotify, they negotiate the terms with the top 1% artists. And it's usually those artists as well are they're signed. So even those are not making that much money because then it stays with whoever they're making music for. So most of the artists, there's these big groups of music artists who people follow. They don't make that much money. I remember seeing like a few years ago, this girl was on the rise. She got really popular on TikTok. And she basically made a video saying that if she sells candles online, she would be making more money than as a popular music artist. So it's definitely broken. Have you seen anything around music that gives you any hope that things will change? Because I feel like this is the one thing when I joined the industry that I thought, like maybe this is where things take a turn.
So the problem about music, and we've been looking at multiple areas of that, I think is a lens of two things. One is, and we've come to this momentary conclusion, musicians aren't financially literate enough. So it's not just a mixture of what are the tools available. It's understanding how to play this game properly in the world of money. And, growing up in Europe in an artist community, nobody ever talked about money. That's kind of part of the issue. And I remember people like Seth Godin, back when the NFT market was hyping up, at the time, he was lamenting and basically saying artists and creators should only focus on creating art. Let the people on money focus on the money. Everyone should be good at what they do. And that's kind of the synergy. And the problem is that with that statement is that he's really, and I'm not sure that was his intention, but really what he's basically doing is he's handing out all the power to essentially the agents and distributors, because the creators could make great art. But, there's painters out there who still have to paint at the age of 70 or 80. The Netflix sort of creators that are making incredible movies, most of them, when they become a hit, I think the sort of Squid Games, I think the original creator made like $1 million or so, something, when it made like close to $1 billion for Netflix as a
This
studio.
is true all across.
Yeah, it's all across, right? So you have this problem, and it comes from this basis of this contractual sort of right to say, well, you've signed off, right? So you've signed those terms, and there you go. But the problem is that the artist doesn't have a choice, because he can't say, well, okay, then I won't do business with you, because if I don't do business with you, you've got the monopoly effect of someone like a Netflix or Spotify saying, okay, then you can't have the music on the platform, which means you don't get sort of discovered, which is the whole point. The ones who own the network and the network effects are basically the most powerful people out there. So blockchain can change that. But I think where we need to go first, and we've invested in companies like Pixel Links and other ones. We've been in partnerships with groups like 3Lao, right, artists, to try to sort of make some changes back in the early days, and of course Sandbox is trying to tackle that too. But it comes down from the lens of, does the actual creator understand money? And so I think what we need to do is we need to teach people about financial literacy, because if you don't have the understanding of financial literacy, you're too willing to essentially sign off something for the short term because you don't actually recognize the long-term impact that it has. Like, it's better to have some equity in something rather than selling everything off, or it makes sense for you to invest in a certain way or invest in yourself in the long term by owning a stake in what you're building or having some kind of royalty or revenue share, for instance. Right? That type of math is important. You see the famous stories about, for instance, I think, is it Michael Jordan, or those sports athletes. Or, for instance, Roger Federer, I think, with On shoes, for instance, right? He didn't end up taking a fee. He ended up basically famously taking a slice of the company, right? And that ended up being much more valuable by putting his star power behind it than actually getting paid a fee for it. And that, to me, is part of financial literacy, because it comes with a little bit of that short-termism, right? The short-termism is also, if I don't understand money and I don't understand sort of assets and asset value, then I'm only thinking about the short term as well, because I'm thinking, how much money can it make for me? And I think this is one of the problems. So it's not only to say that the industry is broken, it's to say that the mindset of musicians and creators is also somewhat broken, in the sense that if they're more willing to say, look, I'll do a revenue share with you, sure, so most of them might not work out, but the one that will pay you so much more than just basically the whatever upfront fee that you get, right? And so it's a negotiation. But if people can basically continue to take equity stakes, it may seem like I'm working for free most of the time. But that's what angel investing is. I mean, think about what happens in crypto. We invest in so many projects. We're basically taking chances on people. And then, one of them does really well. It pays for everything else. That's sort of part of the mindset of understanding that it's taking a chance both ways. And I think this sort of risk averseness that comes with a lack of understanding how the world works, I would say, is part of that. So the education is both ways. It's to say the platforms are obviously taking advantage, have to be fixed, but I think also creators themselves have to learn about that as well, because it's not only one. Two need to tango. If the industry standard was, okay, we'll take a little bit less fees up front, but we want more revenue share, and that became the industry standard, then essentially the platforms don't have a choice either but to comply, because that's what everyone else expects, right? So, and I think this is also to do with money itself. When creators came into the scene, which is really, if you think about it, not that sort of, in a big way, it was really only, when you talk about music industry, sort of last 40, 50 years, or like post-war. Previously, music was not as big as it is right now, with like Beatles, Rolling Stones, Elvis Presley, that type of stuff, right? Money was a store of value. So it made sense, right? And up until Nixon, America still had a gold standard. So that meant that if you had money and you received it, you were actually something that you can accumulate. It made sense to store that. But we've gone off that standard for a long, long time. And again, I don't think people understand that well enough, that it's more important to have equity in what you do rather than cash per se.
Yeah, I think also for a while, and I think still today, but less today, society has been glamorizing the idea of being a specialist rather than a generalist, and skill stacking wasn't really a thing.
Well, with AI now, basically everything is skill stacking, right? Yeah.
Yeah, so I feel like if people aim to develop skills all across from a young age, it might really be the key thing. So,
Yeah, I mean, I think while you can be really good and talented in an area that you should focus on, the thing now that you have with the tools out there, you can amateurize that access. And so that means that you don't have to be a pro marketeer either, because that's a common complaint. It's like, look, I'm good at this, but I'm not good at that. Well, it's okay. You've got tools that help you to do this. I mean, how many people were bad at math and became okay at math because they had a calculator and then a computer, for instance, right? And suddenly they could do stuff they didn't have to sort of think about. I remember, in the earlier days as a youth, if you couldn't do the math as well as someone else, you were seriously disadvantaged. That doesn't happen anymore, right? So this amateurization is happening across the board. So I think we have to get to a point where every individual has to be like a full stack individual, right? You can't basically think of it as I'm only good at one thing, right? And I think this is where we struggle, because that's not what we were taught socially, to say, look, you should only be sort of focused on one thing as opposed to many things. This, by the way, is also a very common corporate complaint for companies of past. Now, in crypto, this is different. You notice how in crypto, companies do everything, right? And they try. And then even if they have the core business, the individuals do everything. They're invested here, they invested there, they do stuff. They're basically full stack individuals. But in the classic corporate world, the common criticism, especially with the traditional VCs, is like, you should only focus on one thing you're really good at. Like, just focus and focus and focus, right? But Asian companies have more of a conglomerate style. So when you look at Sony or Mitsubishi or Samsung or Alibaba, whatever group you want to call, they do everything, right?
Yeah.
And for the longest time, that was mostly derided by the West. And guess what? Now they're amongst the largest corporations and conglomerates in the world, because what they figured out is that if you do all these things, you can also actually correlate and have skills between them. And today, the largest companies in the world, whether it's Apple or Google or Microsoft, are no longer just doing one thing. They're doing many, many things. It's just under the hood. Sure, Apple and Google aren't buying real estate. I get that. However, they do many, many other things than being a word processor or setting Microsoft Office or just doing search. They're doing a whole range of things. So they become digital conglomerates in their own way, and they have thousands of business lines that from the surface might look like all related and therefore tactical, but in reality, they're quite distinct from each other, right? In terms of what they do, whether it's finance related, whether it's sort of, AI related, whether it's even energy related, right? Like all these companies are doing and investing in these areas that are actually theoretically far away from their so-called core competency, right? So I think it's everything. I think the whole world has to go full stack, and AI is the tool that will help you get there.
Yeah. I want to touch some other things. So you have been getting more involved in stablecoins as well. Tell me a little bit about that.
I mean, it's a whole sort of real-world asset sort of tokenization movement. We have a joint venture called Anchor Point with Standard Chartered and Hong Kong Telecom, and we've applied for a license with the HKMA, which is our Hong Kong Central Bank, for basically a stablecoin license in Hong Kong. Hong Kong has been quite forward. I think it was in summer, Hong Kong, just before the Genius Act, a couple of weeks before, had actually passed a stablecoin bill of its own. So that was kind of quite nice. We were part of the Sandbox originally, us and two other groups, to try to sort of experiment and get the HKMA, which is a central bank, to learn and understand that area. So it's quite exciting. We think of stablecoins as the mass onboarding tool for people into the digital asset crypto world, because even if people, in crypto are comfortable using Tether, most people outside of crypto are not, right? It's just not something they understand so well. So stablecoins are very, very tactical this way. But the other thing is that if you want to have a national influence, if you want to have a way in which you can extend your commerce possibilities, you have to go digital.
Yeah.
Think about how many hundreds of millions of people around the world today are now using a US dollar in Africa, Southeast Asia, Pakistan, India, whatever place you want to call it, where most of them might not even have a bank account. And even if they have a bank account, they normally can't convert that to a dollar. And now they're part of a dollar economy, right? So if you are a sovereign nation and you don't have a stable strategy of your own, of one form or the other, in the future, I think you'll become irrelevant. And the lens that I take is very similar to what happened with social media. So for instance, if you are not creating your own framework, then you're going to be colonized essentially by the digital sort of states that are bigger than you. Europe is colonized by Facebook, Apple, Microsoft, Google. There's nothing in Europe. They don't have a sovereign state. I mean, you can call Europe sovereign, but I would say it's sovereign at a national level, but not at a digital level. It's completely dependent on the platforms, right? And that's what's going to happen with stablecoins. If the euro doesn't come out and say, hey, we're going to have our own sort of, basically national strategy around basically a digital euro, or whatever currencies they're looking to build out, you're going to end up basically getting sort of taken over by essentially the stablecoins of a different type. And the US dollar stablecoin is going to be used everywhere, right? So think about it, right? Young people, it doesn't matter if you're in Europe or whether you're in Africa, they're all using a dollar. What happens? The store has to accept the dollar, right? I want to do business with you, right? As opposed to, well, I have to use it in a local currency. You don't have that captiveness. Just how the internet has spread information and distributed and created sort of a way where everything was so-called equal. Like the information I get in my local country is the same as I get in America. It's the same as I get in Europe. The influence, the good and the bad, all comes together. The same is true for digital assets and, basically currencies. So stablecoins are very tactical. So that means that whether you're Japan, whether you're Korea, they're all looking at basically what to do with stablecoins, part of it out of national interest, but also in terms of making sure that they stay relevant, right? And so I think that's tactically very important. But the other thing that we're most excited about is once you have a stablecoin infrastructure, it allows merchants and vendors to build on top of it. That's the other exciting thing, right? Like a lot of people just say, oh, it's like a digital dollar. I get it. It's like PayPal. No, it's not like PayPal. I mean, PayPal is a medium in which you can transfer. But when you have chain infrastructure that's built on chain, then your 16-year-old can build a financial application that can use money. He can't do that today, right? It's not even about a license. The only thing he can do is say, I can accept your cash to sell you candy or something. But actually now I can basically do that all digitally, not just as a means of payment, but innovation and creativity. And that's what we've seen with DeFi. I can create applications because now there's money that's out there that basically is in safe infrastructure in a way that's banking grade, that I do not have to basically build on top. Like imagine if you wanted to build a custody application or you wanted to build something that you could sort of manage people's money in some form or fashion, for instance, right? Basically, blockchain enables you to do that in a decentralized way where you have self-custody. Whereas before, I had to collect the money and hold it for you in very sort of cumbersome ways, right? It allows essentially a lot of that security layer to go away while you can start to innovate on top. Right? And to me, that also leads to more financial literacy because it means money and the infrastructure and the openness of money is broader. Like how many people today know more about coding because it's open source?
Yeah.
If it was closed source, we didn't know much about it. Now the whole world kind of knows a little bit about coding or has an insight because it can basically take down a repo and analyze it and study it. That to me is what's going to happen with money with stablecoins.
Yeah, and that goes back also to the network effects again.
Correct.
It connects people even outside of their own world and their own currency,
right.
their own country.
And the power implied with it too.
Yeah, I remember, so like growing up, a little bit about me, there was this choice already of going with fintech, I guess. So I never really had like a proper bank I started my financials already like fintech, so I don't even know the whole process of like old banking. I've avoided it aggressively growing up, and I avoid cash as well. And I can see like the next generation having this push of like having a preference and pushing for that as much as possible, even when the circumstances are not developed to that level yet. For example, when I go to Thailand, everyone uses cash. Everyone tells me like you need to get cash, and if it's cash, I don't buy because this is how I prefer to deal with money. And if someone gives me cash, it's a souvenir. I don't
Yes.
spend it. And I can see this happening in the future again, because the way it happened to me was so natural, and for other people is shocking. But it's really a matter of your preference and also where the incentives are.
Well, you're the future generation, so we like to look at where the future is going based on what younger people like yourself are doing, right? So that's kind of one way to look at it. For instance, our prediction on gaming, broadly speaking, makes sense because we see young people play games and we don't assume that they stop playing games as they get older, or at least the methods of gamification, that we see today in interfaces and designs and so on, is basically something because we understood because we were growing up. This became are basically design principles that we're comfortable with, or more specifically, your design principles, because I'm a little older. Although I did basically engage in that space quite actively, continue to do so. But the other thing I would say is, just to your point, it's not just about your preferences, it's also about your knowledge. You're much more financially literate. You understand that basically cash has some weaknesses. For instance, if you convert to the Thai baht, if you convert back, you'll lose basically an exchange rate. And while that seems like a small amount, over time, when you keep doing that, actually that sort of, it's another kind of, if you want to call it crypto terms, impermanent loss, right? Effectively, where you're basically losing stuff from different forms of exchanges because of the fact of its high inefficiency, right? So that's kind of one thing. The other thing is that when you can keep your cash in a digital form where you're creating yield on it on a steady basis, and then you use it on demand, why would you do that when it's held essentially in cash, doing nothing? Physical cash doesn't bear you interest, can't be used quickly for other investments, is basically stuck, right? And if an economy is based on that, it's not efficient. So to me, this is where the world is going, though. So if you remember, actually, you might not remember because you're too young, perhaps, but we used to have this thing called digital literacy, right? Where the world was not digital literate. In 97, 98, I had a brief stint working for AT&T, and I had to print my emails for my superior, right?
Okay.
I mean, this sounds outlandish, but the point is he didn't understand. He treated it like a fax machine, right? Do you know what a fax machine is?
I've never seen one, but I know the emoji.
Yes, exactly, right? So a fax machine basically was like a remote printer, right? You would basically scan it on one side, it would go the other way, and then before you
It
had
was a way
telex.
of like messaging company to company.
Yes, exactly. It was a main messaging to company through the telephone line, and it took a long, long time, but you could get visuals across. Before it was really just a phone. And you know that the phone handle that you have on the Apple, that's actually based on the original sort of handle of that phone,
Right, yeah.
right? So the point being though is that we had digital literacy because the internet was rising, and people were like, I don't gonna get this. So it was up to young people like us at the time, or like myself, to basically use the internet and then translate that over to the older generations that they could use that. Now, the companies who were not digital literate went out of business. And the companies who were digital literate were the new media giants or transformed, right? Because now everything is social media, right? We used to have, and everything's internet. But imagine a company that's not on the internet. Can you imagine that? Or a media company that's not social. I mean, that's impossible to imagine, right?
This is what I think when I think of countries adopting like stable coins or playing around with crypto. Like the risk of being too late is actually higher than being early
Absolutely.
and it not working out.
Absolutely. So an example would be if you compare Europe relative to where they went with digital literacy and internet versus America or even South Korea or Asia, you can see a gap. It has to do with the general population's sense and ability when it comes to digital literacy in comparison, right? Now, what we think will happen with crypto and blockchain and the whole Web3 movement is that it's going to do exactly that, but to financial literacy. Because once you basically tokenize an asset of any form, or if it's attention, which is like a meme coin even, you're actually involved in the world of finance. Everything suddenly has money. So every person who is in crypto has some form of financial literacy. It may be primitive, but he's still somewhat financially literate. He's more financially literate than someone who's probably doesn't even have a stock portfolio. And the global index of people who have a stock portfolio is less than 10% globally. Of course, there's more concentration in New York and in Singapore and that kind of stuff. There's more like maybe 50, 60, 70%. However, in most of the world, it's less than 10%. And that's basically what the digital literacy rate was like some 20, 30 years ago. So imagine this. Because of crypto, all people in the world, because of a stable coin, because of RWA, because of tokenization, are now being introduced to the world of finance. They're essentially entering fintech. To us, fintech isn't a thing anymore. It's like AI. Everyone has to use AI. So fintech is the same thing. As a company, you can't call yourself fintech and non-fintech. If you don't use fintech in your business, you are irrelevant over time, right? So that means you have to integrate that. You have to make your business, because your competitor who can utilize financial crypto fintech services more efficiently than you will run you out of business, because he's basically able to use the financial tooling in a way that you cannot. And we can see this in the large corporations, where how many times has the finance organization of GE or Toyota or Sony basically bailed out the operational part of the business because they had to reform and reorganize, right? So again, finance has always been a critical part, but it wasn't available to everyone, and now as a tooling it is. And so I think the whole world is going to be more financially literate because of crypto. And that's also how we get into mass adoption, because as more people understand money, they'll understand crypto, and vice versa. Crypto brings them on, but also people who have more financial literacy will be onboarded. And I think that's one of the reasons why in crypto gaming, blockchain gaming has been so struggling in the West, because many of the gamers don't understand money at all, and they don't want to. Versus in Asia, where it's been accelerating because everyone here is very capitalist and very happy to be looking at their assets in a certain way. And you can see this in the Middle East. And also, really, if you sort of look at the division between what was formerly Eastern Europe versus Western Europe, the formerly Eastern European bloc is much more comfortable with money than, say, the Western European.
Yeah, I think it's definitely true if more and more companies start adding, like how some companies added gamification to their products. Now, if everyone starts adding economic incentives or financialization, or I don't know if I'm making up a word now.
Yeah, financification, that's a word. Yeah.
Then obviously, like, even from a young age, if you're playing games, if everything has some sort of financial structure, by the time you become an adult, you're familiar with all the terms and you're familiar with every structure. So you sort of learn it on the background the same way you'd learn a language.
That's right. Exactly. It's part of the culture. And when you think about the culture, I remember when I came to Hong Kong, I don't know, it was like 30 years ago, oh my goodness. But anyway, and I grew up in Europe. And when I came to Hong Kong, I was taking a train to Sha Tin, not to attend the horse races, but it was on the same way. There was a racing day. And a dad was teaching his child, maybe either 5 to 7 years old, whatever, very young child, how to bet on horses. And I was looking at that coming from Europe. I was like, what are you doing? Are you teaching a kid how to gamble? Oh my goodness, this is terrible. Coming from a sort of Central European perspective.
Yeah.
And now I understand that this was, really just for partly entertainment, part of the culture. It's not that he wants his son to become a DJ and gambler, right? It's the fact that he is teaching him about his attitude towards risk and some ideas and how to plan it, whether it's intentional or not, as part of the culture. And so the relationship that we have in this part of the world with money is much more normal. And I would say normal in a sense that it's healthy. For instance, we can do business and we can become friends. And how many people have become friends through business? Whereas in some parts of the world, that's unusual or strange. I mean, I might meet you at work, but that's not business. I'm working here and that's different, as opposed to we do business together and then we basically build friendships from that. Money is a way in which we sort of grease a transaction that begins a relationship, right? That to me is just like an icebreaker. I think of money as the global icebreaker of the world, because you have money and you want something, I can do a transaction, and from that we can build a relationship, right? Whether that transaction has to result in just the transaction or can go deeper is part of that process. And I think we have that attitude in Asia much more than we have in many parts of the West, where we try to distinguish between the money and the business and the relationship side, when in fact they are actually connected. They don't have to be directly connected, but they are part of the engine that makes us human, right? Because as humans, we always do transactions one way or the other. I mean, even if you want to ask someone out for a date, that's a transaction. You're taking a risk, by the way, and the chances of rejection are probably higher than basically making a bad investment, I think, for most people, right?
Yeah.
So, and we do this all the time, right? And then when you decide, on your life partner, I mean, talk about the biggest risk you might be taking in your life, right? And yet we seem to do this very, very easily and sometimes flippantly, right? Versus, when the way we think of money. So I think as humans as being transactional, and we have to sort of understand that lens, and that it's not good or bad, but it's just part of who we are.
Yeah, I see this transactional mindset more and more. Obviously, with having like a range of friends in all levels of financials, the transactional conversation is more straight up and is more forward, more clear, more obvious at the top, let's say, than at the bottom. And I wonder, like, if there's a psychological side to it, because even if we open up, if everyone has access to stable coins, they can manage their own economy. There's still like the psychological side of it. Obviously, it's amazing. Just enabling things worldwide, there would probably be like a restructure of the economy, perhaps. But I think also like from leadership and like government perspective, there should be also some push for the education in terms of mindset
Sure.
and how to think about
it's
it.
part of the culture, right? So, I mean, financial literacy can be taught in primary school, can be taught in middle school very easily if you had systems for that. But to me, it's about the culture and the acceptance of it. So let's take an extreme example. So in Korea, for instance, it's very common for women on the second or third date to ask the guy how much they make. And you can't imagine doing this in Europe. Like, you'd be canceled right away, right? And it's not to say that one is right or one is wrong. It's to say that, look, I might like you, but am I wasting my time? And, that kind of stuff. Because if we're going to go be together for a long time, I want to make sure that there's a prospect. And they basically just sort of, instead of being indirect and trying to figure it out based on what kind of watch you're wearing or where you live, just go straight out and ask you the question. Because you know what? If you're comfortable with that, I'm comfortable with that, let's move on. Because at the end of the day, if you want to have a relationship, transparency is important, right? Well, you would say so, right?
Yeah.
But the point, and while I think it may be a little bit frightening for some guys or maybe insulting in other cultures, it's accepted. And so to me, this issue around money is more of a cultural thing than just purely a financial sort of literacy thing. But the financial literacy comes with the understanding what money is. So if I'm more financially literate, then I won't be offended by that comment. Whereas if I'm not financially literate, then I'm very offended by this comment because I don't get it. I might feel maybe sort of insulted, right, and all that kind of stuff, right? So I think we have to start from that lens. And I think, the other thing is, if you think about it sort of politically and socially, we live in a capitalist world. So that means in order to sustain ourselves in a capitalist world, we must all become capitalists. Well, what is a capitalist? It's someone who owns stuff. It's a capital owner, right? How many people own stuff? Not enough. That's the problem. Most of us basically are in a labor economy. We work, we get cash, we spend it.
Consumers.
We're consumers. We don't own, we don't invest. The future, especially when you look at where AI is going, is every one of us needs an investor. And what I find so fascinating and why I'm so bullish about crypto is that by default, because we're buying tokens, we're all investors. Now, that doesn't mean we're good investors, but it means we're all capital owners, which is why every Web3 person is a capitalist. Right? And so the division we have in the world today is between people who are capitalists and who are not capitalists. But when you think about the economic engine and the incentive that's being sort of driving the world, it is around basically the power of capitalism. So we have to basically find ways in which we can embrace that culture and be more open about this. And we don't have enough conversations around this. And I think part of it is also because for some people, they don't understand it, and therefore they're afraid of it. And then this inequity happens. If you look at the value of labor and capital, capital has accelerated tremendously over the last sort of 3 or 4 decades versus labor. And so everyone's in the labor economy is making less money in real money terms than they were doing before. And so naturally we have these problems in the world, right?
Yeah, it's been a pleasure talking with you. I could go for 3 hours. We could do like a Joe Rogan here. but unfortunately, we're way past the time.
Of course.
I just want to wrap it up with some prediction. What do you
course.
think is going to happen for 2026?
Short term? Okay. Well, I mean, there's a whole bunch of things. Well, first of all, one general prediction I want to make is that collectively altcoins are going to be much bigger than Bitcoin, right? And it's not to say that Bitcoin isn't going to be the most valuable asset. As a single asset, it will be. But collectively, altcoins is going to be outperforming Bitcoin maybe up to 10 or 20 times. Why do I say that? Well, I think of Bitcoin as gold, right? So gold today is about a $24 trillion asset. When you look at the entire asset market, it's almost $300 trillion. Just the stock market is $128 trillion, meaning that Apple, Facebook, and Google are not by themselves bigger than gold. But when you put all those major companies together, they are. Now, why is that? Their utility, their applications, their growth, their usage. What's that happening in the token ecosystem? It's the altcoins that are basically driving growth adoption, whether it's in gaming, in L1 and L2s, in whatever that is, right? In AI agents. Gold and Bitcoin will always be that ultimate store of value in their respective sort of digital and physical worlds, but they're not going to be larger than altcoins as a whole. Right now, it's flipped, which is why we are so positive on altcoins as a whole overall. Of course, how you pick them is a different question altogether. The other thing is institutionalization of crypto in a big way. If you're not basically institutionally ready, you're not going to be one of the big guys. So whether this is a DAT as a digital asset treasury company, whether you are an ETF, whether you're listed in some form or fashion, we're entering that phase right now, which means that we're going to be seeing more and more companies, including in crypto gaming, trying to figure out ways how you become essentially listed in the traditional markets as a way to get that sort of, recognition and that institutionalization. So definitely, that's why we're going into stablecoins and RWAs, because we see the world merging in from that institutional direction, which will then basically help grow the space. So by 26, we think the space will be a $10 trillion market overall, up from, basically, I think we're roughly at, 4, depending on which day you look at, right? Give or take. And also, we believe that crypto gaming is going to have its big moment next year. We were prefacing this on the launch of GTA 6, because that's just a way in which,
Finally.
because there was a lot of positive momentum in gaming, right? Just to sort of, tokens mimic essentially sort of sentiment in the world. They're much like stocks. They're market signals, right? So if AI is hot, AI tokens are hot. If Trump is hot, Trump token is hot, right? So if gaming is hot, then gaming tokens are hot too. And we were hoping it would happen this year. And then GTA 6 said, basically Rockstar said, next year, right? So now basically it's more like it's going to be May. Fingers crossed, if GTA 6 does launch, we do think it's going to be a big revival for our space.
GTA 6 has been a strong meme on social media.
Indeed.
This podcast will be out before GTA 6.
Yes, almost certainly, yes.
For everyone watching, make sure you follow Yat, Animoca, and Global Blockchain Show. This has been our episode today. Yat, thank you so much for joining me, and I'll see you next time.
Thank you for having me.